All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for April 18th, 2024. So I want to start with a question that was posted in the chat room. It gets to the idea of system overrides versus what systems to trade and rules and discretion and so forth. So Greg asked this question and posted this chart. This is concerning the U.S. Steel symbol X trade on 2024-04-17. That's yesterday. And he notices this entry short with a standard risk, which paid about 4R after it was about 5R and then rebounded. And he's observing this entry and he says, well, wait a minute. I've got a harsh winter condition. The RL10 Dragon has crossed to the upside. In here, this rolls up, and we've got a PSAR flip, and the Dragon has started to roll up. So why shouldn't this be a buy signal? Why is this short? And is this a command override? If it's just avoiding the long trade but taking the reverse, why? Why discount the above four conditions? Are there rules in play that would lead us to override rules? In other words, what are the complete rules or whatever? Do we have a running list of other items that might flag and override a rules? Well, at some point it's personalized, but let me just drill in a little deeper to answer the question. So let's go to the this is still 30-minute charts. This blue line here is the close on the 16th, and you can see that, yes, there's an extraordinary downward slide. So I have a short side bias. This is the 5-period anchored VWAP, the 3-period anchored VWAP. Here's the Bollinger Band mean. This was the PSAR that got flipped in the morning right here. So let's just looking at 30-minute charts. I'm going to zoom in on that a little more so we can see a little more clearly. So here's what happens. Everything that he said is true. When you get a PSAR flip, so here was the last PSAR flip at the close, and the close is right here. And there's a small gap open, which sells off briefly and then runs straight up through the spine of the dragon, through the skin of the dragon, flips the PSAR here, leaves the dragon here, crosses the VWAP here. So all that is up. Well, those four rules that you said says, yeah, you can enter right here. It was not one of my priority entries in the first half an hour because the gap was so small. I had other things that I was trading where the gap was large. So I'm interested in US Steel, and I see that trade because I have an alert that when it crosses the PSAR flip, especially after an SSC, that triggers my attention. So that is the valid entry that you're talking about. Could you take that? Yes, you could. Should you take it? Well, if it meets your criteria and risk management, I would say, yeah, you can take that trade easily, and it meets all the four criteria. Now, the risk box on this, the R10, is 26 cents. Here's US Steel. Here's the R10. That means that the move of the day, the range stat, is about $2.60. So if the low of the day at that point was 40.20, this thing could go to 42.80 on the upside. So when it hits the SSC and flips the PSAR, that's an absolutely legitimate legitimate frame. Kicking myself I didn't take it. Now, if I set the PSAR as my stop, I'm at 40.20. And the PSAR entry is right here, and let's call it 40.45. That's a 25-cent recommended stop, initial risk, just based on the technical considerations of the chart, that the PSAR flipped right here, and that the standard exit would be at the base of the RL10, which is where the PSAR flipped. So there's my standard risk box. Can you take that trade? Yes, all day. That's an SSC. Now, in the next 30 minutes, this thing ran all the way up through the Bollinger Band mean, which it could have entered, and runs up through the 30 period anchored VWAP and goes up to the 5-day anchored VWAP, makes a peak, rolls over, opens, and starts coming straight down like a scalded ape. Now, at its maximum favorable excursion, this, if that's my risk box, this looks like about 1, 2, 3R in hand. Let's double check our math. It's at 41.15 with the entry at 40.45. That's 60 cents on a 25-cent risk box, so that by eyeball, it's about 3. In practice, that is 2.4R. What if you had a 1 risk box trailing stop? That means that when it peaked right here, you probably end up getting out. You've given back that much, and then your exit to preserve 1.5R would be here. And you're happy with that. You might have said, you know what, I'm going to give it a little more room because it had such a nice strong move, and I'm going to get out at the Bollinger Band mean, or if it crosses the VWAP, in which case you get a little over 1R. This is the argument for, on the early morning trade that has this amazing burst up and then roll over, that looks like dragon horns. So I don't mind giving back 1R in order to preserve 1.5. That is the trade that you're asking about. The 4 rules that you were talking about, that's the trade you take. I didn't take that trade. I don't have to take every trade that I see. I wish I had taken that trade. The trade that I took is this trade. When this thing runs up like a scalded ape and then immediately reverses hard and then crosses the Bollinger Band mean and then goes below the VWAP, that triggers my pituitary glands. Let me move this out of the way so now you can see the price action in here. So, yeah. So with that, to continue the thought, this thing came down through the Bollinger Band mean, through the VWAP, anchors here, opens here, runs up just a little bit, and then starts to fade again. That's where I get short. It could not get back through the VWAP or the Bollinger Band mean, so I get short right there. Now, this great big blob of a red dot obscures some of that. So if I was in on this narrow time frame, my short is there. And my risk box is the standard risk. That's 35 cents because that's what I have been using in US Steel. So that's the trade that I take. And the reason I take that trade is because this looks like a tactical SSC that worked and then immediately failed because there's no additional follow through on the 30-minute charts, and starts realigning with the downward move. And now I see that I can get back on board with a short below the Bollinger Band mean. And my entry here is an improvement over having been short over in here. I feel like I'm getting this same kind of trade. So I wouldn't be surprised if this thing goes from this level down to here, because that's what it did yesterday. So my trade is the next trade, and this is a Kata 2 to the short side. And when it crosses the 3-period anchored VWAP and leaves the dragon and crosses through the PSAR dot, I'm entitled to move my stop from here down to about here and say no lose plus dinner for two. And then that trade continues on all the way down to 39.40 after it did this, stabilized, and then collapsed some more. So that trade gets short from approximately 40.60 down to 39.40, which is a capture of $1.20 on a 30-cent risk. So that's a 4-hour trade. That's a bigger trade than this trade because the primary move is that way. So this is not a command override of this trade. This trade works according to the rules that you laid out and then should exit somewhere inside here. And now this is a new trade. And that is a pure Kata 2 all day, right by the numbers. Now, here's the next thing I want to say. We trade on a framework that looks at 3 minutes, 30 minutes, daily, and 3-day. Now, I want you to notice where those two blobs are. I'm going to shrink them so that when I go deeper, it's a little easier to see. Now, when I drop down to a 3-minute chart and scan out of this a little bit, let me show you what that first trade, according to the 4 rules that you laid out, which are correct. Here's how that trade unfolds. I can get that even further, just a minute. And this is why I wish I'd taken the trade. So this blue vertical line represents the close here. This was that minor gap down, so I didn't think there was going to be an abnormally large move because it was just an ordinary gap. That thing rolls over and then right away breaks up through the anchored 3-day VWAP, and it makes an emerging dragon right about here when it breaks out above these two pieces. And now when I draw my 30-cent risk box from the low of the day, which at that point was 40.50, here's 30 cents. So you actually get an R10 move off the bottom from here to here, and it's above the emerging dragon, and it flips the PSAR. So why in the world I wouldn't take that, I don't know, except, oh yeah, span of control. And my attention is placed on things that had large gaps, which are also prone to these kinds of large moves. This is a good problem to have. But to your point, the entry, according to the rules, if you just follow the rules, you can take that trade. That's what an SSC on a 30-minute looks like when you drop it down to a 3-minute chart. It turns out this actually looks like an emerging dragon because the last hour yesterday was a generally upward movement. It had a minor gap and then it continues. That's easy to believe in on a 3-minute chart. So you can take that trade. And now look at that trade. If your stop was here, by the time you get to this consolidation, you might say, oh, I don't know what it's going to do. So what I'm going to do is just make sure that my stop is up in here somewhere. Maybe you just use the PSAR trailing stop all the way up and just let it run until it gets out right here, which is a better exit than an R10 trail. But if you just take that trade, you get this. And here's where the R10 on the 3-minute charts rolls over. So you're actually entitled to take this exit. I would prefer this exit. And then you get the entry at 40.45 and exit at 41 even, which is a capture of 55 cents divided by 30 cents, which is about 1.8 R. So I'm not understanding your question in one sense, because on the 30-minute bars, if you are zoomed in and looking at it, you can take it according to a 30-minute rule on the opening trade, and you can take it on the 30-minute chart on the short trade, as I explained. And oh, by the way, on the 3-minute bar, you can actually take this trade with a stop right here to the top of the risk box. And look at you, that's only a 20-cent risk tactically. And if you're using the R10 of 25 or 26 cents, even if you take the exit all the way up here, you're not even taking a full R loss. And when you see the price action looks like this, you're not going to lose money on that trade with standard management. And oh, by the way, the 4R trade, if you're looking at the 3-minute bars, which you might want to do when you have a setup on the 30 minutes, you might want to look at the 30-minute bars. But when you have a setup on the third, this is what that looks like. Here's our entry. Let me have to adjust the size of the dot when it when you go to the 3-minute. Here's what that trade looks like on 3 minutes. Now, this exit in here, because of scale and the way they draw that, is over in here. But when you scale that out to 30-minute bars, it ends up showing you what the price level is that you get out at. So this one was a perfectly satisfying trade all the way down into here, and probably you could get out here. Now on the 30-minute bar, that's not a reason to exit. And then the 30-minute bar was satisfying and lucky because it just blundered into this trade because it dropped like a stone. And if you were on a 3-minute bar, you probably would have gotten out in here, which is fine. And then you may have tried to get this one on the breakdown, like anywhere in here on the collapsing dragon, could have. Or you may have tried after this extension, you might have gotten an effort to trade in here or in here on the long side. I wouldn't recommend that after 2 p.m. So the point of this is that we are working with rule sets that look at 3-minute and 30-minute and daily and 3-day. And you can see that in that location on the 3-minute, that's a tradable entry called an emerging dragon. You could almost call it a kata 2, but it's really an emerging dragon because it broke above those and it was free and clear. And then you have a very clear VWAP target up there to aim for. On the 30-minute, it's also a good move because it was a risk box off the low, and that's sort of like a form of a hybrid frog or an SSC. On a 30-minute bar, it looks like an SSC. So the short, which happens over in here, is not associated with that trade at all. Like I'm not choosing to not take this so that I can take that. No, I just elected not to take that trade. And when this trade came along, I took that trade because it's a kata 2 to the downside after it rejected a recognizable resistance area on a symbol that is on a horrible downward slope over the last 10 days. And then I just got lucky with this big sell-off over in here. So hopefully that answers the question. Now let me shift back to the regularly scheduled program for, let's see. All right, so we're back to the 30-minute. This is, let's see. Yeah. All right, so this was yesterday's trade. Why is my 5-day chart not showing? Anyway, this was oh, that's right, because this is Alcoa. So this was Alcoa yesterday. This is Alcoa today. Big gap down and reversal. I take, oh, I know, because I'm on the 3-minute chart. That's why. Sorry. So this is Alcoa 30-minute charts. Here was the gap open, sold off and reversed. Looks like a morning hook. This is an R10. This is where it crosses its internal daily VWAP. I get long. This thing runs up like a scalded ape again, hits all of the resistance at the Bollinger Band mean, the 30-period regression line, the upper skin of the dragon, and rolls over. So I take the standard exit for 1, 2, 3, 4. I missed the short side trade. So that's Alcoa. AI, morning hook, got paid for an hour early, missed the downside move. Cat, morning rebound, it gapped up, sold off, held support at the Bollinger Band mean and the 3-day anchored VWAP and started to reverse. I get long, standard risk, preserved 1R when it came all the way back to the skin of the dragon after the R10 peaks. Cliff, collapsing dragon all day, 2R, standard exit. CVS, no trade. Diamonds, I tried 2 trades here. One of them was the opening gap and go, ran all the way up, rolled over, took the exit at the skin of the dragon for an R. After it came down through the Bollinger Band mean, I got short just in front of the PSAR flip. And that's a new low of the day. And I was able to get half an R out of that. Missed the piece in the middle. Disney, this is that I missed the morning move to the upside. It rolled over. This has been my default position basically all week is the reversal intraday back to the downside. When the tactical traders who are trying to buy value on a dip get their little nugget and then leave and no new buying pressure comes in, the short sellers take over and they take it this way. That's the nature of the market these past 3 to 5 days. So we pick up an R on the short in the standard way in Disney. And in Devon, this was a long, slow grind. It gave a little bit near the end of the day, but I don't want to hold it overnight. Emerging markets, I missed the trade in both directions. Ethereum, I missed the trade. EWW, couldn't get an entry. EWZ, however, was a clear gap up and roll over, so I'm short. And then it sold off nicely, came back to the skin of the dragon. I exit for 3R, 2R. Home Depot, no trade. I missed. That's the same standard trade. Worked all day for everything, but I missed all of that. Intel, I did get that. Now here's one where you get like the dragon horns in the reverse, almost the reverse, where it sells off. I missed that. It comes up to the PSAR and the dragon and rolls over. Now notice everything is down. The Bollinger Band mean is down. Anchored VWAP is down. The 5-day VWAP is down. The PSAR is down. The dragon is down. The RL30 is down. When this rolls over at the spine of the dragon, that's a kata 2. I take a wide stop and cash 1R. IP, no trade. Coke and no Coke. There was a emerging dragon breakout, ran up hard when it stalled and the R10 rolled over. Take the exit at the skin of the dragon for half an R. Real estate or regional banks, no trade. Now this is McDonald's. You'll recall that yesterday this was the one symbol that I kept overnight. Here was the overnight exit, right? So that's 4 o'clock yesterday. here was the close. So we had those two positions early and it closed very well right here. So I kept it. Today it made a new high. So I added a third position. It ran all the way up the R10 peaks right here and the VWAP started rolling over. So I exit here to keep this third position in the money and I'm all out of the whole position. I missed the downside trade. I missed the recovery trade. I thought hard about entering with markets money, putting one position back on here because it felt like this is going to be a COTA 2 for tomorrow. I noted it, didn't take it, and I will be ready to trade that on the first sign of continuation tomorrow. So McDonald's is one of the few symbols in that whole stack that is showing anything like resilience. 3M rose up, didn't take it, shorted it when it came through the VWAP and touched the skin of the dragon. Standard risk, exiting at the Bollinger Band mean near the end of the day for an R. Merck, no trade. Microsoft, this is just another continuation in the downward slide of Microsoft, the leader. This was a failed upside trade. Short was successful. Today, I missed this short. When this rolled over inside here, couldn't even get out of the dragon, didn't test the PSAR. Bollinger Band mean is sliding. PSAR is in this direction. All of the anchored VWAPs are down. It's below the 30 anchored VWAP as well. That's a COTA 2 in my view. Standard risk, pretty tight. And picks up 3R, exiting near the close of the day. And then notice that it closed at the bottom of the day. So there's more downside to that tomorrow right away. So if I was going to be short anything tomorrow, that would have been one to be short, but I'm not going to do that overnight. Marijuana, the intraday collapse for an R. Notice the theme. Missed the COTA 2 twice in Nike and NVIDIA. No trade. Clean energy, the morning rollover. So again, this was the whole theme of the day. Opens, runs up, cannot get through this cluster of resistance. So when that rolls over, I'm short as it leaves the dragon, slide, rebound, exit near the close of the day for 2R. All part of this narrative of the downward slide and getting short on failed breakthroughs. So all I'm doing is trading in the direction of the primary trend, which is down. Palantir, same trade for fraction. Rivian, no trade. Missed that one. Tesla, it was a gap down and I couldn't get any traction inside here at all to find anything. Walmart was, I missed the short on that one. US Steel. So this is the continuation of this long slide. We saw what happened on the 17th. This is the 18th, starting right here. It closed here, opens here, rolls up, sells off. I'm short, standard risk, the big slide and recovery exit for 1.5R. XLI, which is becoming a favored trader of mine. Let me slide this over a little bit. So this is the close. So this was a continuation and a PSAR breakout and crossing the Bollinger Band mean. Those are Greg's highlighted 4 rules for you right there. Long runs up, hits the 5-day anchored VWAP, starts selling off as the R10 peaks. I get out just above the skin of the dragon for about an R. When it comes down through the Bollinger Band mean, I'm short with standard risk. And I'm quicker to take 2R on that one near the close of the day. No surprise that the futures are down big. Yeah, tomorrow is going to be Tactical Friday. Could be a big gap down to get all of the easy inventory with people that were panicking from today's failure to follow through. If you look at the S&P today, here's what the narrative was. Oh boy, we got this big sell-off and it held support yesterday, and all of the optimists buy it, and then it collapses and then has a poor close, and it's a new low. And so everybody's going to panic and sell at the open tomorrow, which means the futures are going to be way down so that everybody can buy inventory on the big gap down and have a morning hook and then sell that fast. If that happens, you're going to see like a close here, an open here, rapid rapid gains, and then a sell-off. And then that's the pattern I've been trading, is the resumption of the downward slide. Not biting on this gap and go. Although that's tradable, the one that is more aligned longer term with that longer term downslide is the things that I've been working on the 30-minute. And that's why you see most of those today look like that. So that's the 30-minute portfolio. And hopefully I've answered that question for you, Greg. If not, send me another note. Sniper trade of the day. So this is an EWZ. This was an opportunity trade that developed. Here's the open. So this one is about 90 minutes into the day. So it's even past this is, if that's the open, anything at between 0 and 30 minutes is kind of a leapfrog. Anything where I'm entering after 30 minutes would be a quick frog style. And then anything at 90 or 60 minutes in would be a slow frog. This one was kind of a reaction to that. There was some general marginal upward moves, and then a PSAR flip, and then cross the Bollinger or the VWAP, then the Bollinger Band mean. So I get short here with a standard risk box like that. So there's my short. Check or hold. This is after it crosses below the Bollinger Band mean. Now my thought is it's going to come to here, which gives me 1 unit of risk, probably 2 units of reward. And then if it fails below here, then that's a sign that this thing may really be painful. Check or hold. It does just that. So I miss, even according to my own frame, I should be able to get a second short in here after it is broken below this, because I got 2R in hand and it's an affirmative collapsing dragon pattern. I get it later after the next collapsing dragon, because like right after this potential entry, it mucks around and then fails again right here. And that was the collapsing dragon I took. And now I got about 3R in hand. Could have entered another position there. And by this time, it's at 1 p.m. and I'm through lunch. I got to be thinking about how to get out of this thing. So I could be, if I wanted to use the PSAR, my stop would be here. If I wanted to use the Bollinger Band mean, I could be here. If I wanted to use something like a reversal off of the bottom, I would simply put that anchor and say, do I want to take this size of a wrist box off the low of the day? And that would put me somewhere around in here. So any exit in this region would still lock in a good trade on 2 entries as I'm starting to look at running out of time, because this is where the close is going to be. And I notice that I'm a good long distance away from the VWAP. So now I got to decide, how hungry am I? If this thing were to rebound off if that's going to be the bottom, and I end up getting an exit right in here, and if that is my risk, could I set up a trade to get to the anticipated location of the V? If the VWAP continues to decay like that, I could theoretically get a 2R trade on the VWAP magnet in the last couple hours of the day. If that's the case, then I probably want to look at even getting out sooner so I can get into a zero state and try to maximize that trade, knowing that if the VWAP magnet trade fails, I could still do a continuation trade that way. So those are the things that are on my mind as I'm looking at the life cycle of this trade, considering how much time I have left in the day and where the indicators of the day are and what my probable region of exit is going to be. Check or hold. So I end up taking the Bollinger Band mean. I stop and reverse because I'm going to try to set up the VWAP magnet. It gets 3/4 of the way, then the R10 rolls over. It gets all the way up into here within spitting distance of the VWAP, but then the R10 rolls over. So I'm going to take the exit at the skin of the dragon, or I could have taken it here at the PSAR. And that gives me about an additional 1R. And then this exit here allows me to get, let's see, 1, 2, 3, 4R on the first one. And then this one gains about 1R. So that's about 5 on the short side and 1 on the long side. So that brings home in the neighborhood of about 6R. Now, I thought about this Kata 2 continuation, but I looked at it, hey, we were after 3 p.m. This had sold pretty hard. I did not think that was the high probability move. And the distance to the VWAP was so short that it really wasn't worth. That was only a 1-to-1 trade, so I didn't take it. And then naturally it punishes me by going 2R before it rolled over. So that's going to happen all the time. And you just get used to missing that. Check or hold. If I go down here to the MACD, and I'm just checking where are my entries on this? Well, as I'm leaving the Red River, and then it becomes a harsh winter, and then when it comes back to the Red River and then doesn't make a spring move, second position, and then the exit is somewhere around emerging from that quiet Red River to the upside, and then the long trade is the spring and summer. So it kind of affirms the utility of the MACD 4 seasons. Let's go to the traders. This is Brian Lancaster. Welcome back. And this is the British pound Aussie dollar on 5 minutes. And here's the larger scale, also 5 minutes. He zoomed in a little bit more on this one to get a little more amplitude. And he sees this kind of move with a double bottom and emerging off the bottom. So he's able to get an entry in here. I think that's this one. Oh, wait, no, I'm trying to read this correctly. No, I'm sorry. I think I am misinterpreting. I think he's saying this was signs of affirmative movement. And I think this is, yeah, so this is where he gets his entry. That's this entry over here. Same one. And then he plays that trade to here. It peaks, and then he sees some downward pressure. So he decides to lock in about 0.4, 0.39. And he takes a measured bite out of the middle of the rib. That's good work. I think somewhere in here is a legitimate trade, but that probably kicks him out and he'd have to figure out re-entering. So in this case, the patience of waiting for the Bollinger Bands to open up a little bit makes a lot of good sense. A little easier to see over here. But you had the first urge, held a double bottom. Now he's getting the second leg up. That feels like a cot of two. And then if it breaks above this peak of the RL10, there's possibly another move in here. Okay, so good work from Brian. George gets a 1, 2, 3 entry. This is 30 minutes. 30 minutes on XLI, our favorite lately. Standard risk gets this one. That's like about a 1-2 exit, because you have one, and then when it breaks down, he's really taken the 1 bar low, and he locks in 0.6. He notices this. The VWAP is rolled over. The R10 is rolled over. That's a great short. It's a 1, 2, 3 short, and you get that move. And then with the same logic, you probably get out here or here. And then that trade would probably be one of those two. I could live with the, that's so late in the day, I might have taken that one, or just the skin of the dragon is fine because you're right near the close. And then he gets a 0.7 here on a 1, 2, 3 entry on AI and gets exactly what was available. There's that large move up, kind of an emerging dragon, as well as a 1, 2, 3. Gets him in. Cash money runs all the way up, comes all the way back down, and doji's out. He takes a 1 bar low. Cash is 0.7. Good to go. This is that rollover trade that when you see that, and you see, hey, the tactical buyers are nibbling, but not sticking around. When that rolls over, you can actually get short here, or when it crosses the VWAP, or when it hits the PSAR. Any one of those would give you that trade. Take a look at the dailies here. This is the 150-day look back. Still a long distance to the 150 anchored VWAP because that anchors from here. So that's the volume weighted average price. You can see just how exceptional that upward move was to here, to the all-time high. And the downward slide continues. And we dipped below key price level of 500. That explains the large downward move, excuse me, in the ES, in the aftermarket session. And so now this is no man's land down in here. Is that selling going to open and then do this, or sell and collapse? I don't know, but that's going to be fireworks in the morning. That's why I don't have any overnight risk at all at this point, because I want to sleep well. And I'll be looking for the things with the biggest gaps to start with. On this one, the 30-day, I think of this as the intermediate tactical. Here's your 10-day anchored VWAP. Here's your 5-day anchored VWAP. Here's your 3-day anchored VWAP. That's telling you the tail. And here's where it closed today, below 500. And it could not make a new high. So that's all down, and it closed poorly. That'll get your attention if you're a money manager. Yeah, here's that. Here's the 30 minutes. So here's where it opens. You get that early burst back to the anchored VWAP and the PSAR, and it rolls over for the big move of the day here. That's why I've been looking to try to fade at the turn. And that has a kata 2 flavor to it. That failure to break out suggests that the primary trend is still in force. That makes that a low risk move to be on the short side of the track. You know, I'm a predator over here with my little team of predators, and I see the herd is running this way, and then they say, "Oh, yes, we're going to try to go long," but I'm waiting for them to roll over, and I'm going to go meet them right here. And as soon as I see them hit resistance and start to roll over, that's where my target entry is going to be, because I know they're going to come back this far and maybe farther. So I'm looking to play the turn, which is right here. If you're doing that on the 30 minute, the 30 minute has a path like that, and you're trying to get inside here, you can then drop down to the 3 minute, like I showed you on the opening remarks, in order to refine those entries. And it really stands out. You can even use the 10 minute as an intermediate if you had to. All right, dashboard 1. Bullish volatile, a trader's delight. Extreme short-term weakness, extreme short-term volatility. Volatile market, risk off, abnormally volatile. We've come down a long way from that bullish quiet trend. Yeah, there are still some signals flashing on the buy on dips. And remember that that is a reliable trade. That says in a strong bull, which we've had, that a pullback on either channeling or overreaction, in this case, it's about 5%, signals routinely a buy on dip opportunity. The way we structure that rules is we wait to see breakouts to the upside in order to be the second mouse getting in. But any violation of the lows means it could be a continuation of that to the 10% sell-off, 20% sell-off. Bull, that becomes a bear market in the mind of the professionals. And then that can lead to 40% sell-off, which would take it down to 370. So this is where we are right now. And this is like walking on thin ice in the spring, trying to get across the lake. You can make the argument that it was a long winter that had thick ice, and so that ice is going to hold, that resistance is going to, or support's going to hold, and you now have a chance to buy strength on a 5% sale. That's the argument for the long side expressed in here. Happens about 70% of the time, year in and year out, because of the market's bullish bias. On the other hand, the very strength of that bull market, which took it up to historically fast heights, it was a historically large, fast move to get here. So there's more of an urge to protect that, which actually supports it could sell off to 10% and the bulls would still be happy because they'd made so much money on the way up. And what that says is that maybe normally the guys who buy on dips might be just trying to preserve some profit. So that allows for a larger downside slide down to 10%. Well, in the S&P, that's another $25 to take it to 475 or 470. So there's a strong argument tactically to be made for a move. So what's it going to do? We don't know. That's what makes it a tactical trading market. And a sniper doesn't, when a sniper has a target in the box, doesn't care which way it runs. I'm going to shoot at it whichever way it emerges. And I'm going to start with the ones that have the biggest gaps tomorrow because they're the ones that are most likely to make large one-day moves. I am only interested in large one-day moves right now until this market settles down and gets out of the volatile and gets back into normal or quiet. Whenever it's in volatile conditions, I'm a short-term trader because everybody's losing their mind. Tons of setups in the Dow tactical on the long side, but plenty of 5DDs that if they collapse further could go a long way. Exceptional weakness in Tesla and Intel and Apple and Microsoft. What's that tell you about the health of this market? The ones that should be leading are the ones that are getting murdered. ETF tactical, agriculture. I still can't believe I don't have a bigger position on that. Good Lord. Inflation and a real asset is breaking out all over, going to be above 26. Dumb. Clean energy was the big mover. A big mover today is getting slaughtered. That's why it's a terrific short side trade. And I am looking for ways to get short that intraday for the easy move. It's a great intraday trader because it has a large average daily range. So when it starts breaking down more than the others and has a large average move and the intraday move direction is down, that's a logical short target, PBW. Everything is on the auto framer because of how far we've fallen from the 10-day high. No surprise there. Was there any squeezes today? Walgreens, Merck, Tesla, McDonald's on my short list, and 3M as an industrial. Being dominated by the winter, no surprise. Lots of big sellers with weakness today. McDonald's and Nike stand out as possibilities because they're bucking the larger trend. That means people are specifically buying those two symbols as safe havens against troublesome times. They don't want to go to bonds. They're afraid of tech because it's getting murdered. Energy is too cyclic. What are you going to do when you don't know what to do? Buy McDonald's and Coca-Cola on sale. That's what you do. Over here on the ETFs, XLP and XLU are doing fine. Big breakdowns across. And look at how bad tech is. It's leading the way down. So it has leadership of a kind. Tesla, marijuana, Nvidia has moved up into third position. PBW has dropped to fifth position in terms of tradability for intraday. Caterpillar's in there, Nucor's in there. Texas Instruments in the semi space. The red Niagara cascading 5 days down in a row. We're at the bottom of the yellow zone here on the slope of the RL30. We're just starting to get abnormally downward sloped. That is the beginning of fear. And that's what leads to those large overnight markets on ES. The weakness in ES statistically would be a reflection of the beginning of fear. That is the beginning of fear. We haven't even seen fear yet. And that's accompanied by that sharp rise in volatility, whichever way you want to measure that. And the downward slide with the downward bias continues. The 10-period regression line Z-score is now below 2 sigma. This is a natural place for that to find support. So this is evidence of the compound critical state that we're in, that when fear is just beginning to manifest, you see the RL10 Z-score slope gets down below -2. The last 2 times it did that, it had short-term spikes. the buy on dip opportunity. So that does represent a buy on dip opportunity because it's a 5% move just to the back to the 10-day high. And that's a legitimate move. But that can also lead to further downside because the RL30 Z-score hasn't gotten negative yet, and it can get negative like this. So there's still a lot more downward slide for those to go. And this is becoming, nobody's believing that bull market anymore. It's come back within, now it's under 2 sigma. Still a bull, but it's an aging bull. So that's why this is a perfect critical state for a 1-day trade tomorrow on a Friday to be able to play a sharp move in either direction. And you don't have to have overnight risk or over the weekend risk. Anyway, that's what I want to say about that. We'll get this published and posted and be ready for them tomorrow. Take good care. That was an important lesson at the start.